Thank you.
Okay, that's Vinity Organics. But moving on to one space that has been buzzing in the last few days, Metro Brands is a stock that has been faring very well. It's up around 44% in just 6 months. And overall, it's up 80% higher this year. If you remember, the issue price of Metro Brands was 500 rupees. And look where the stock is right now, 850. Motilal Oswal has written a note on the footwear sector where they say that organized players are growing at 1.5 times the rate of the overall market. On Metro Brands specifically, they point to the consistent double-digit revenue and profit growth and have initiated a buy with a target of 1,000 rupees. To discuss demand trends and the growth picture, Nissan Joseph, the Chief Executive Officer at Metro Brands, is joining us now. Mr. Joseph, thanks a lot for joining in. You know, the Motilal Oswal report that I was just referring to, the key thesis for growth for them is that you're adding more stores. Can you tell us what is the store expansion plan? How many stores would you add this year and next? And what would that translate into in terms of growth for you? Mr. Joseph, you're on mute. If you could just unmute yourself.
Apologies.
No,
Good morning again, Sonia.
Morning.
We had guided on our RHP to open 260 stores over the next 3 years after we went public, and we're well on track to do that. I think the growth opportunities really come from new store growth, but also the fact that we are seeing productivity increases in our existing stores, and then ASP increases that become a factor of the basket of goods being purchased, and also inflation that continues to be a part of the Indian landscape.
So you're on track with your guidance of 260 stores over the next 3 years. But can you give us a slightly more immediate target? In Q1, you opened 20 stores. How many in Q2 so far? And what is the revenue per store?
So we are looking to weight the openings of the stores to the front end of the 3 years rather than the back end of the 3 years. I think we are on track to do that without giving specific numbers as we get to the end of the quarter. But we're more than on track to do that with a little bit of weightage towards the front part of the 3 years.
Mr. Joseph, the other kind of leg of growth for you has been tie-up with third-party brands. Could you tell us what's the latest there and how is that doing? What is that is the share of your overall earnings? What will that be, that proportion?
Anuj, so we guided and we said we do about 30% of our business from brands that don't belong proprietarily or in contractually to Metro Brands. And that number is not a target that we hope to achieve as much as it is a target that we want to do to make sure that our consumers have a wonderful consumer journey in our stores. It's tracking quite well. FitFlop opened, as you know, our first store of FitFlop opened back in April, and it's tracking well. And we remain on track to open somewhere between 3 and 5 stores this year for FitFlop. Our Crocs expansion plan continues, and both those brands continue to do very well inside our Metro, Mochi, and Crocs stores. We also launched recently a Canadian brand called Bion, which is a little bit of a niche brand. It's a fun brand. So we continue that growth as we look to opportunities to please our customers in our Metro, Mochi, and Walkway stores.
Mr. Joseph, good morning. That was Prashant. Anuj this side now. I wanted to understand how's e-commerce shaping up for you, and especially with the shoes market. There's always this issue of people wanting to go to a store and check, right? But e-commerce, how's that shaping up as a channel?
So I think we've been pleased on the journey of e-commerce that over the pandemic, it became a convenience shop, which is what you want to see as opposed to be a discount-led shopping event. So consumers got used to the convenience of it. What is encouraging to see is that once the pandemic has lifted, offline has continued to do extremely well, showing that the consumer did not switch to go from offline to online. They still like the offline shopping experience. But equally, our online business continues to grow at a 79% CAGR over the last 3 years, and we continue to see the growth trajectory in e-com. So one of the reasons we see good numbers on the last few quarters is that we're seeing good traction on both channels happening together as opposed to one substituting the other. So we remain very confident that the e-commerce space will continue to grow, but equally excited about the offline business we're seeing.
So, just coming back to the overall industry, right? This Motilal Oswal report is very bullish on the sector. They say that organized players are growing at 1.5 times the rate of the overall market growth. Is that a fair assumption? And do you think that it could get better through the course of the next couple of years? I'm not talking about the immediate target, just trying to understand how the dynamics could change over the next 1 to 2 years.
So I think there's two forces driving that disproportionate growth into the organized sector. One, of course, is the fact that more high streets and malls are coming alive. More malls are being built today than before. There are more high streets coming alive that attracts organized retail. So that's one factor. The second factor is that through the pandemic, some of the businesses that got hurt disproportionately was also the unorganized retail sector. So that's number two. And the third force that we have driving people from unorganized to organized is the fact that as middle class incomes rise, so do aspirations. And as aspirations rise, people want to shop more often in an organized environment than an unorganized sector. So the choices are more, the availability is faster, and the desire is increasing. And I think all those three elements create a great tailwind for the movement of growth in the organized sector, overwhelming the growth in the unorganized sector.
Okay, well, thanks a lot for joining us, Mr. Joseph, and all the best with your store expansion plans. That's Metro Brands, up 5% almost now. They stick to their guidance of